Most people think if you owe the ATO money and just don't deal with it. Worst case, you get a stern letter. That's not how this works anymore. The ATO has real enforcement powers, powers most people have never heard of until they're already on the receiving end of one. They can take money straight out of your bank account without going to court first. They can stop you boarding a flight at the airport. They can make you personally liable for a debt your company owes. I'm going through 5 of these powers, exactly how they work, and, more importantly, how to make sure you never end up on the wrong side of one. Quick reminder, I'm not your accountant or a lawyer. What I'm covering is how these enforcement powers legally work, not personal advice for your specific situation. If anything in this video sounds close to where you're at right now, that's your sign to get professional advice today, not after you finish watching. Let's start with the one that surprises people the most, because most creditors need a court's permission to do this. The ATO doesn't. Number 1, the Garnishee Notice. Here's what makes this one different from almost any other debt in your life. If you owe a bank or a supplier, or basically any regular commercial creditor, they generally have to take you to court and get a judgment before they can touch your money. The ATO doesn't need to do that. Under the Taxation Administration Act, the ATO can issue a Garnishee Notice directly, no court order required. A Garnishee Notice goes to a third party that holds or owes you money, your bank, your employer, sometimes even your own clients or customers if you're a business owner, and it legally requires them to pay that money straight to the ATO instead of to you. Your bank gets the notice, and a chunk of whatever's sitting in your account goes straight to the tax office. You don't get a say in the moment it happens. The notice goes to the third party, not to you as a request for permission. For individuals, this can mean money coming straight out of your everyday bank account. For businesses, it can mean the ATO reaching into your trade debtors, the very clients who owe you money, and redirecting those payments before they ever reach you. That's obviously brutal for cash flow, and it can happen while you're actively trying to run day-to-day operations. Here's the detail that makes this even more serious than most other debts. A typical court-ordered garnishee generally stops working if you go bankrupt or your company goes into administration. An ATO garnishee notice can keep applying even during bankruptcy or insolvency proceedings if it was issued before an administrator was appointed. It's built to have priority over a lot of other creditors. How to avoid it? The ATO doesn't jump to this as a first move. It's generally used after a debt has gone unaddressed and the taxpayer hasn't engaged, no response to correspondence, defaulted on a payment plan, or shown no willingness to resolve things. Responding to ATO contact and getting a payment arrangement in place, even an imperfect one, is what keeps this option off the table. Number 2, the Director Penalty Notice, or DPN, which I've touched on before, but the enforcement mechanics deserve their own look here. If you're a company director and the business has unpaid PAYG withholding, superannuation guarantee, or in some cases GST, the ATO can issue a DPN that makes you personally liable for those amounts, bypassing the usual protection a company structure gives you. Here's how the timeline works, and it moves faster than most directors expect. Once a DPN is issued, the ATO can generally start legal proceedings to recover it just 21 days later. There's a specific distinction worth knowing: a non-lockdown. DPN applies where the company has at least lodged its BAS or super reporting, even if it hasn't paid, and gives you some options like placing the company into administration or liquidation to remit the penalty. A lockdown DPN applies where the reporting itself was never lodged, and in that case, paying the debt is essentially your only way out. Administration or liquidation won't remove your personal liability. And here's a detail that catches multi-company directors off guard. If you're a director of more than one company, and multiple entities have unpaid amounts, a separate DPN issues for each one, and the total personal exposure stacks across all of them. How to avoid it: lodge your BAS, IAS, and super reporting on time, even when you can't pay in full. That alone keeps you out of lockdown territory and preserves your options. And treat PAYG and super as untouchable, non-negotiable payments in your cash flow planning, not a flexible line item. Number 3, and this is the one that genuinely shocks people, the Departure Prohibition Order, or DPO. Yes, the ATO can stop you from leaving Australia. A DPO is a formal order under the Taxation Administration Act that prevents someone from boarding an international flight until a significant tax debt is paid, or a satisfactory arrangement is in place. And this isn't some rarely used theoretical power. The ATO has confirmed a sharp increase in DPOs recently, issuing more of them in roughly the first 6 months of one period than in the entire previous financial year combined. It's actively increasing, not fading out. Here's the part that's genuinely important to understand. A DPO is primarily aimed at taxpayers the ATO believes have the capacity to pay, but are choosing not to engage. The ATO looks at things like discretionary spending, travel, or asset purchases as signs someone could pay, but isn't. Financial hardship on its own doesn't automatically protect you from a DPO. What matters most to the ATO is your overall conduct and whether you're genuinely trying to resolve the debt. The ATO has specifically flagged higher risk where debts involve money that should have been passed on to someone else, unpaid super and PAYG withholding, essentially money taken out of an employee's pay that never reached the ATO. Those debts are treated as more serious and more likely to trigger a DPO than an honest personal tax debt. If you're already under a DPO and have a genuine reason to travel, there is a process. You can apply for what's called a departure authorization certificate at the Commissioner's discretion, but that's a reactive fix, not a plan. How to avoid it? This one comes down to the same theme as every enforcement power on this list: early engagement. The ATO has been explicit that taxpayers who contact them, negotiate a payment plan, or genuinely demonstrate hardship are very unlikely to face a DPO. It's non-engagement that invites escalation. Number 4, the ATO, reporting your tax debt directly to credit reporting bureaus. This one applies specifically to business tax debts, not personal debts. If a business has an ABN, isn't in an excluded category, and has an outstanding tax debt that meets certain criteria, the ATO can disclose that debt to credit reporting agencies, the same agencies that generate the credit scores banks and lenders check before approving finance. Here's why this one is genuinely damaging beyond the immediate embarrassment. A poor credit report from a disclosed tax debt can follow a business into every future finance application, supplier credit check, or lease negotiation, well beyond the original debt itself. It's not just the ATO is annoyed with you, it's a mark that shows up when you're trying to grow, refinance, or even just get normal trade credit terms from suppliers. There is a specific protection worth knowing here. The ATO generally won't report a business's debt to credit bureaus if that business is already actively engaged with the ATO about managing the debt, for example, through an active payment plan. Engagement is genuinely the thing that keeps this off your record. How to avoid it? For business owners specifically, this is another reason silence is the worst option. An active, respected payment plan is a straightforward way to stay off a credit report entirely, even if you can't pay the debt in full right now. And number 5, the most serious tier, formal legal action, which can mean statutory demands, winding up applications for companies, or bankruptcy notices for individuals. For businesses, the ATO can issue a statutory demand and, if it's not addressed within the required time frame, apply to have the company wound up, effectively forcing it into liquidation. For individuals, once a debt passes a certain threshold, generally around $10,000, the ATO can issue a bankruptcy notice, which can be the first step toward formal bankruptcy proceedings if the debt isn't addressed. There's also a lesser-known power worth knowing about. In situations where the ATO believes someone might move or hide assets specifically to avoid paying a tax debt, they can apply to the federal court or Supreme Court for a freezing order, which prevents a taxpayer or even a third party from disposing of, selling, or moving assets. This isn't limited to assets in Australia either. It can apply internationally. These are generally the last resort, used where a taxpayer has shown a consistent pattern of non-engagement, repeated defaults on payment arrangements, or in more serious cases, deliberate avoidance behavior picked up during an audit. How to avoid it? Genuinely, at this level, the answer is the same as every single power on this list. None of these are designed to catch someone who's engaging, communicating, and making a genuine effort. They're designed for taxpayers who've gone silent. 5 real enforcement powers: money taken directly from your bank account with no court order, personal liability that bypasses your company, a block on leaving the country, damage to your business credit rating, and in the most serious cases, forced liquidation or bankruptcy. If there's one thread running through every single one of these, it's this: The ATO has been explicit that engagement is what keeps you off this list. Every one of these powers exists specifically for people who've stopped responding, not people who are trying. Quick reminder, I'm not your accountant or a lawyer. This is general information, not personal advice. If any part of this sounds close to your situation, don't wait. Reach out to a tax professional or the ATO directly this week. If this helped, hit subscribe. I break down every ATO power, rule, and change before it catches you off guard. See you in the next one.